quick intro, which I've already done, but basically, yeah, we feel like, one of the reasons why I started Legacy Advantage is I was working at KPMG and did a lot of nonprofit audits and reviews and returns and realized across the board that nonprofits, especially smaller ones, have a difficult time finding good quality bookkeepers because it's a specialized skill set and the people that really know it are really expensive, and so it's kind of a double-edged sword. So we want to start today on a high level to explain to you how to protect yourself from the financial perspective, not just to how to do books correctly, but how to protect your finances. So what's the point of doing proper bookkeeping? Yes, it's to keep track of things, but also to make sure that your money doesn't get lost. So a lot of our content will be around that as well. My name is Gene. My name is Bob. That's Gene. I wish I was Gene. We love charities. All right. Great.
Okay, so the title of this is how to make your not-for-profit audit-proof. So there's two circumstances in which you might have an audit. And one of them is in order to keep your charity status. How many of your not-for-profits are charities? Do you know? Okay, so we've got a couple. And does anyone here require an external audit? No. Oh, yeah, couple. Okay, good. So that's the other circumstance that you would want to that you might have an audit is at the year end, or that you will have an audit is at the year end. That you might have an audit for your charitable status. Okay, and as Bob said, a lot of your organizations are small and growing, so it helps to have good controls in place for all of these organizations. It's not just to make it audit-proof, it's actually so that you can safeguard your assets in cash. So what we're going to talk about today.
All right, so adequate controls around cash management, having a knowledgeable board, having a manageable and understandable chart of accounts, internal controls over expenses, documentation and compliance, not preventing the commingling of externally restricted funds, how to actually do the record keeping, some common errors, and then deep dive into some audit procedures. So we actually did this presentation before, and one of the feedback that we got was that we were way too high level, and they weren't really sure what the auditors were going to look at if they were actually going to do the audit. So we're going to do a bit more of an in-depth dive in this section here and talk about if you do get an audit, what are they actually going to do and how to protect yourself.
Cool.
Great. Adequate controls around cash management. So first of all, I just want to clarify the word control can be confusing. Basically, it's just adequate systems to prevent money getting lost. Basically, that's what it's saying. And the best advice is reduce cash. I can do this one. Basically, you just have to think about the segregation of duties. So an example that we have is one bookkeeper that collects cash at fundraising events, counting cash by herself, depositing cash, and reconciling the bank account. So basically, we have one person controlling cash from beginning, which means the collection of it, to end, which was entering the data into QuickBooks. If you have one person doing all of that is a very, very high risk activity, because this person can easily say, actually, instead of receiving $40, I'll only receive 20, right? So if you have a really good control, it's important to have multiple people in that process.
Yeah, and I just wanted to add to that because this was my example from living on Salt Spring. We had a charity, and they had a big fundraising event, and the executive director was thinking, hey, yeah, we raised $15,000 at this event, and only $10,000 made it into the bank. And effectively, they had the same person who was the bookkeeper sitting at the event, collecting the donations, counting the cash, making up the deposit slip, and depositing it into the bank. It didn't actually get into the bank until 3 months later, what did get in there. So, and that's just one example. I mean, the truth is that cash is appealing, and people's morals get blurred when they're around it. They just think, oh, I'll just borrow this, and then I'll pay it back, and it just goes missing.
Yeah, I just want to add a comment here as well. Oh, there you go. To prevent the use of cash, you can take checks, credit cards, or use online donations. So you might think, hey, you know what, I'm paying 2.5% on credit card fees. But you have the knowledge, the peace of mind that your cash is not going to get lost. So maybe the 2.5% is worthwhile for that transaction. And if you talk to PayPal, they actually have a nonprofit rate. So if you talk to them, you can get a discount on the PayPal rate, which can help you there. Another system so you can write down Rotessa and Pluto are great for recurring donors. So some of you, for example, have monthly donors. So instead of putting them on a credit card and 2.5% comes out every month, you can actually get them to sign a pre-authorized debit agreement, which is a form. They say, hey, I agree to take $25 out of my account every single month. So in that circumstance, you're paying a flat fee per donation as opposed to a percentage. So that's the link for Pluto, Rotessa. Donors sign a pre-authorized debit authorization and give you a void check, and you can automate donations. And it's $1 per transaction versus percent of revenue. So if someone, say, donates, let's say $200, they get charged $1. If someone donates $1,000, it's $1. On the other hand, if they only donate $5, it's also $1. So just kind of weigh that to cost, pros and cons. And if you use QuickBooks Online, then Pluto and Rotessa both synchronize with the system, making the accounting a lot easier.
And yeah, I just wanted to add to that because I know probably the most practical advice is to say just use less cash. But I know also that when you do a lot of fundraising and you go to, you have a dinner or a silent auction or other types of fundraising events, people do pay in cash, and they pay in cash often, and they don't want a donation or they don't want a receipt. They just, give you a handful of cash. So in order to minimize, in those situations, there's a couple of things you can do. And first of all, is if you're selling tickets, make those tickets pre-numbered, and then at the end of the night, reconcile, this is how many tickets we sold, and this is how much cash we should have. So, but then a lot of times you're not going to have, you're not going to be selling tickets, people are just going to be giving you cash. So the other thing to do is keep your cash in one place, make sure 2 people count the cash at the end of the night, and then it goes directly into the bank. If it doesn't go into the bank that day, it should go into a safe, and then a different person should record it into your accounting system. When you're a small organization, it's really hard to segregate the duties, so you just want to be very mindful of people, when they're around cash. So I hope that helps.
Great. All right.
Thoughts example.
Yeah, so I'll give you guys a case study here. So we have a client who's a nonprofit child care society. So basically they're a daycare. And they had a pretty big problem. So most of the parents paid by post-dated check. Here's 10 months, 5 months. But it didn't always work because sometimes they have pro-D days. So they need to ask for extra checks, right? Sometimes the checks bounced. Sometimes something happened, right? So instead of, the executive director actually spent a lot of time chasing for these checks. Like, hey, I'm missing payment from this parent. It was such a waste of time. And so I introduced Rotessa to her, and all the parents signed the agreement, gave a void check, and whenever there was a pro-D day, they charged extra. Whenever, every single month, the same amount came out. So it was just so seamless, saved her so much time. They might have paid a bit extra in fees, but you know what? That she made it back in time back. So that was a really good tool.
Okay, so that's the first point was cash management. So the second thing, and this is really also quite hard for a small organization. Your second great control is to have a board that understands finances. So. And here you run into a problem because the motives for not-for-profit organizations are not to make a profit. They're to usually to provide a cause that is near and dear to them to benefit certain people. So it helps to have someone with a financial background on your board that can help you stay in line. And there's some places you can go, like, because a lot of the things I volunteer on, there's like, people always want accountants to be treasurers. So I find myself on dance, boards and whatnot. But there are lots of tools that you can use, and one of them is right on the CRA website. So you can just go to the CRA website and Google charities tools, and there's some checklist tools that you can use to make sure that your charity is going to keep its status, and other services to make sure that you have adequate books and records are right on there. So you can look there. Oh, I just said this. So it helps to have a treasurer with a financial background. And most people are on boards because they buy into the mission. They're not necessarily business people. Yep, already said all this. Okay. So, but the other thing that is really useful for your charity or your not-for-profit is to set a budget. So you can probably start at the beginning of the year and say, this is how many events I want to have, and I expect to raise this much money, and this is how much I expect to spend. So you want to set a budget based on what you know. And sometimes if you've been around a few years, you can base it on what you've done in the past. But if you're just starting out, you're going to say, okay, I'm going to have this many charity events. I expect to raise this much. This is what it's going to cost. And then you want to not just do your budget, but compare to how you're actually, the actuals at the end of the month. Look at how close did we get to making that budget, because that can help you in the future in either changing the course of how you make your decisions, or it can also help you find out where you might be running into some control issues, like if your expenses are way out of line. So that will help you as well. And then we've got this orphan point here at the bottom. At the bottom it says board minutes must be signed. But I remember that from my doing audits on Salt Spring. Every set of minutes I looked at was never signed. But that is required by the CRA. So if you do, you want to have those signed. Yeah, sure.
So one of the reasons why we really like QuickBooks Online or even QuickBooks Desktop is the budgeting function. So this is a screenshot of QuickBooks Online. So go to the right-hand side in the gearbox, and then you would drop down to see budgeting. That's where you...
That's what I'm doing. Okay,
yeah.
That's my job.
That's where you
Here's
go
the
ahead
gearbox.
and create the budget. Okay. And then when you want to go see the budget, you go to the left-hand side, there's a reports button, and then you'll see an option called budget versus actuals, which is right there. So if you click on that, you can actually see how your year-to-date compares to the budget, right? So those are some practical places where you can go to get that information. All right, have a manageable and understandable chart of accounts. Basically, the message is keep it simple. We've seen charities with hundreds of lines of accounts. And when you have so many lines, it makes it so hard to keep it clean. And we've seen charities that have, let's say, travel parking, travel ferry, travel flight, travel gas, travel Supreme gas, travel parking ticket. It's like, do you really travel local? Do you really care how your travel money is spent? I mean, if you do, and if you spend a lot on travel, then yes, absolutely, it makes sense. But maybe let's just keep it simple. Let's just call it travel, right? Same thing with like automobile repair, automobile lease, automobile. The other one is office. Okay, postage. Like, really, $2 postage? You're gonna create a separate line on it? Office pens, office IT, office, like, it's just office, right? If the office line gets really, really big, yes, okay, we need to separate it and kind of see what's actually making up that office line, but just keep it practical, okay? Keep it small, keep it understandable, keep it simple.
Can I just go back on that? Yeah, because I think a lot of people, they think the required to detail, to break things, and they're not quite sure how much detail they're supposed to have, so they just err on the side of having a separate line for every item. So the rule for your not-for-profit is what gives you the most meaningful information. So you don't have to worry about, which lines are okay. It's what is most meaningful for predicting your future. Okay. And so in designing your chart of accounts, the most practical thing to do is think about who is going to be reading my financial statements. Who's going to be the end user? So for most people in this room, it's going to be yourselves. So you're looking at them to find out what we can do in the future to improve what we did in the past. So you want to design your statements for yourself, and that's what I just said. Some other people will need to have an external audit, so they'll have to, or to comply with charitable requirements, they'll have to make sure that they comply with CRA's requirements. So they'll want to look at their external financial statements prepared in accordance with Canadian accounting standards for not-for-profits. And then they'll say, okay, revenue, and then there's like 10 line items, and then you can just make your internal reports correspond with the line items that you're meant to have at the end. I was going to say something else, but I've forgotten about it. More detail doesn't mean more accuracy. And I think Bob, when Bob was saying earlier about how people do travel, travel shell, travel gas, whatever. You can put everything into travel, and you might say, maybe we do want to know how much we spend on gas or whatever, local as opposed to far away. You can then just look at that one account and do reports within there. So you can still get that information. You don't need to have a separate line for it. Okay, so we've definitely seen a lot of this. And I think, do you mind if I use Forest and the Family as an example? So this is a perfect example of a small charity doing a great job, and just a little bit too much in the chart of accounts. We cleaned that up, so I think you're going to find it. I think you're going to find it works really well for you now. So
Can you talk about using sub accounts?
Yeah.
For board reporting purposes.
Actually, I think Bob wants to talk about sub accounts.
Sure. So. You have the chart of accounts, which are basically main accounts, and you can create sub-accounts that lie beneath the main accounts. And the reason why those are useful is we can show reports to different people based on different level of detail. So for an executive director that wants to know, let's say, how much we spent on printing versus office chairs, she might want to know that, but the board, they don't care. They just want to know how much we spend on office supplies. So we can actually create, printer and paper and whatever, and create all of these as sub accounts of the office accounts. So that if you want to show the report to the board, you show them just the main accounts and keep it at high level. If you want to show it to the executive director, then you can use the sub accounts to drill down to all of those details. So that's just a tip on how to use QuickBooks Online. I think we have a screenshot on that. Beautiful. So again, in QuickBooks Online and in QuickBooks Desktop, similar function. You go to the Accounting tab, you find the chart of accounts, and that's where you add new accounts. If you click on the New button there, that's where you add the new account. That's it. Right, and then if you want to add the sub-account, so after you click on to add a new account, you just select, this is a sub account of whatever account, and there you go.
Yes.
Yeah.
So
question.
You said not to have too many details like travel local, travel class, travel, and now you're saying you have sub accounts. So to use sub account or not to use sub account?
That is the question. That is the question, and it really depends on the situation. So the question to ask yourself is, are you going to find it useful? So for example, the example I use here is insurance. So for example, if you have, say your church, you have the church building, and then you have the mass, which is where the pastor lives. They're two separate houses, right? I want to know how much insurance I spent for each place separately. So I want to create two sub-accounts under the main insurance account. So when I show this report to the board will see one account called how much you spent on insurance. But as executive director, I want to know how much I spent on insurance for each house. So in that case, having the detail is important.
How flexible is it? Can I add the sub-account at any time?
Anytime.
What if there is a sub-account with the entries in it, and I want to cancel it, to move the entries back to the...
Yeah, that's fine. You just uncheck that box.
Or you merge it. You can merge your accounts as well.
Yes.
Okay, so now we talked about cash management, we talked about having a knowledgeable board, and we talked about having a sensible and simple chart of accounts. So the next thing we're going to talk about is internal controls over expenses. Expenses. And again, we want to keep it simple. So for internal controls over expenses, so our point here is that you want to make sure that you keep documentation. You want to keep your documentation filed. You want to ensure that if anyone ever wants to see what you spent this check on, that they can find the backup documentation. So in the days of old, we always did that by, if it was a vendor, we would file it in the vendor file or the expense file, we would file the paper copy. But now in the digital era, you can scan your receipts or you can use your digital copy and you can attach it right to the bill in QuickBooks. To make things even better, if you, there's lots of apps out that you can use, so you can, this would be very useful for charities, like things like Receipt Bank. You can just take pictures of your receipts, upload them. You just take a picture and press the button and it automatically gets uploaded to Receipt Bank, which then gets pushed into QuickBooks. So, and the joy of doing that is that Receipt Bank has, with every country that they're in, they have an agreement with the tax authority, the CRA in Canada, that all receipts are in compliance with CRA. So you can literally throw away your receipts once you've uploaded them. So that makes things really nice. Oh, and we talked about Receipt Bank and Expensify. Was that a question, George?
Yeah. So the idea of just using a separate credit card purchases without keeping the receipt doesn't do it.
Sadly, no. No, the CRA does not look at credit card statements as adequate documentation to support the expense. I have seen them accept it, but I've also seen them refuse it. So they have every right to say, no, we want to see the actual receipt.
That's something there. So here I mentioned WayPay. I want to adjust that to Pluto, P-L-O-O-T-O. So WayPay, we tried, and we no longer recommend that software. It needs to be updated. But the software we recommend is Pluto, P-L-O-O-T-O. And it works pretty much the same. Basically, Pluto can be used to add multiple layers of authorization. That's really good when you have, let's say, 2 or 3 people on the management team, or you have board members that sign checks. So traditional. Do I talk about this?
Do you know how to go back?
No.
No.
Okay.
You should totally talk about it though, because last time I talked to the Pluto people,
Yeah.
the eyes lit up for people who are like express mailing like things to get signed by board
Yeah.
members in different cities. And
Oh,
waiting
it's
for
crazy.
emails so much.
Crazy. So I'm the treasurer for the French Festival, and every 2 weeks I get a call. Hey, can you come by and sign checks? And I'm like, oh, yes, I'd love to. but why do I have to? They could just use Pluto to initiate an electronic fund transfer. So So the bookkeeper can initiate. So that's one signing authority. And then the executive director gets a notice in her email saying, hey, please sign. And she can, or he or she can be anywhere in the world and approve these items. And that could be, let's say, the second signatory. And then the board member gets notification saying, hey, please sign these, or please approve these EFTs. He or she logs in from anywhere in the world, and boom, money goes up.
And don't forget to tell them that they actually have the receipt attached to the notice that the person gets, so they can, please sign this. I want to know what I'm signing. They actually get the PDF right there, and they can look at the invoice that they're approving.
Yeah, the traditional way is you have the actual invoice, and then you attach the check, so that when treasurers sign, they can kind of see the backup. Well, using Pluto doesn't negate that, because the actual PDF is attached to the EFT instruction, right? So it's really, really paperless. And guys, summertime, board members are away. You cannot get a signature, right? Payroll still needs to get done. So anyway, my point is saying, really look at ways to digitize your process and make it easier for yourself, make it easier for your board members, especially on when times are, when they may not be around.
And just a reminder, Pluto, cheap, $1 per transaction.
Is that a question?
Chad?
So I did a lot of travel last year, and I had the pleasure of a lot of travel coming this year. And it's a lot was in the States. And when I'm in the States, I have to submit actual receipts for expenses, which is lots of fun. I'm gone for like 10 days, and I bought this coffee for $2, which are my credit card, which is $3, and I have to rectify all this. So I've loaded receipt bank and Expensify on my phone. I'm not open them yet, but I'm hoping that will make my life less painful outside of like weeping on my desk when I get back with some envelope receipts and credit card statements. Is that a fair assumption?
Definitely will, and it deals with foreign currency, so you're good.
Nice.
Mm-hmm.
I moved it to the payroll.
Oh, and this is Bob's favorite.
Oh, there you go. So, for any charities, payroll is a huge piece, right? Payroll is one of the biggest expenses for any organization, especially charities, where it's for the most part people-powered. So, make sure you have the proper documents in place if you have employees. Make sure you have up-to-date employee contracts. If there are contractors, ensure those have contracts as well. So it's just gotta pay attention to this distinction here, employee versus contractor, right? So if there are employees and you pay them as contractors, you might be liable for more than you think, so just pay attention to that. If you use a payroll software provider like ADP or Payworks, make sure you have the payroll registers that match up with the accounting records. This is a point for larger organizations. So sometimes you might have a charity that has like 4 departments with, let's say, 3 restricted funds. And in those circumstances, it might be important to break out payroll into various departments. So if you do have to do that, make sure you have the correct calculations to back those journal entries up. May or may not apply to you. Yeah, so this is where we show you where to attach the expense. So if you use Receipt Bank or Expensify, this is automatic, but you can always scan or take a photo of your receipt and attach it right to the transaction, which it says attachment here.
A little paperclip.
Yeah, so you enter the bill, and you enter the check, and you just drag and drop into that area, which is great because when the audit comes and they say, show me the backup for this transaction, it's right there. Boom.
Oh.
Boom.
Oh.
Same with the journal entry. If you ever need to use the journal entry, that's where you attach the backup.
No journal entries. Okay, so now the next thing we're going to talk about is documentation and compliance with grant requirements or funders. Okay, so this is another area that tends to get really messed up with not-for-profits and charities, is because the thing that you really want to do is you want to raise funds, but in some cases, people will say, okay, yeah, we'll give you some money, but only if you spend it in these particular ways. So, and that I think someone mentioned before, so if someone gives you donates money to be used for a specific cause, then it's called a restricted amount. So it's externally restricted. So if it's restricted by the donor, it's called externally restricted. If it's restricted by the board says we're going to set aside some money to do some capital improvements, then it's internally restricted. But in both cases, those would be funds that are restricted. Okay, so big issue of concern for auditors, external and CRA, is that you are using the money given by the donors the way the donor wants you to. That's what they're trying to check, that you're using the money the way the donor wants you to. So, to keep yourself clean and organized, what you want to do is get all your contribution agreements, if you've got grants, or your letters from donors that say, yeah, here's $5,000 to put in the bench in the preschool, or whatever the thing is. And then you want to attach that to QuickBooks if you're using that. So you've got your compliance, your contribution agreement, and your other documentation to say how the funds are to be used attached. So if you ever are wondering, it's right there. The next most important thing to do with your contribution agreement is read it. Often people will get the money, we got $20,000, yay, or we got our $30,000 gaming grant, yay, we got some money, so let's spend it. But you can only spend it the way you're meant to spend it. So you have to read it and then set up a restricted fund if it is to be used for specific purposes. Some funders will want you to create a separate bank account, gaming for example, but I don't know of too many others. Okay, yeah, so this is what happens when you do a lot of fundraising and you don't keep things straight. So there was another example of a client I had on Salt Spring, and they were doing some fundraising to get some money for an emergency vehicle. They were a search and rescue outfit. And so they went to all the different charity or organizations, the government, the Rotary Club, and got all this funding for the emergency vehicle, and the emergency vehicle cost $100,000 and they raised 120 or something like that, and then they thought, okay, yeah, we have an extra $20,000 to spend. Nuh-uh. They have to give, they're only allowed to spend the money as it's, they can't double fund. Oh, there we go. Do not commingle externally restricted funds. This creates a hornet's nest. So the way that QuickBooks copes with this is it has something that's called classes or departments or funds. So in this case, they would have a separate class called emergency vehicle, and they'd have money coming in, and the revenue that would come in and the expenses that went out, and they would know when they had spent it all. So if you think of your financial statements as an XY.
Oh yeah, you're right.
Yeah. Then you would have your classes along the the x-axis. So you'd have extra columns. There are extra columns for your. So you wouldn't just have one. You would have one for your emergency vehicle, one for whatever other classes you would have all the way along. I should have had a picture for that. Okay, and so the other important thing is you cannot transfer funds that are restricted to other funds. You can transfer internally restricted funds that are restricted by the board as long as you have board approval. So those can always be restricted. Externally restricted funds cannot be transferred. Okay, we're on to record keeping.
Keep them for at least 7 years.
Oh, that's
Keeping.
good.
One of the more important things you want to keep is any property additions. So if you bought a computer, if you bought a vehicle, if you bought a whole bunch of desks, make sure to have those backouts and attach them to the QuickBooks entry. those will be one of the first things that the auditors will look at. Keep records of insurance, keep for 7 years, separate folders for each grant, and ensure donation receipts are compliant with the CRA. So I think it's next. No. So donation receipts, they'll have a whole bunch of requirements. I think a list of 10 things that you need, check boxes that you need to hit. I'll touch on them a bit later. Here are some tools that you can use for record keeping. We talked about Receipt Bank, Expensify, they're great. One of the most common questions we get is, does the CRA accept digital records? And the short answer is yes. If the digital record is a photo or a scan of the original copy, then that's okay. But you cannot manually create a digital receipt for a document. Another advice that I would heavily suggest is use a donor management system, donor management software. So donor management software is really awesome because it allows you to basically have a donor database. Think of it as a CRM, but for donors, right? It allows you to generate CRA compliant donation receipts. It allows you to send mailing lists, emails. It's just really, really good software to have if you want to grow your charity. Another really important step to record keeping is reconcile the donation receipts to the GL every month. So when you use the donor management system, you would enter all your donors in that system. But you would also transfer those revenues into QuickBooks. You don't need to enter the same data twice. You can just do it through one journal entry, but you just got to make sure that they're correct. Common errors.
Avoid them.
Yes. Yeah, please.
Very often it's important to just like minimize the number of channels and just have as many things as possible in one place. And I'm just a bit worried that like when you mentioned all of those tools, it will become only more and more difficult to keep track of everything, especially if one person has to do it.
Yeah.
Right? So like the main place where everything should
Yep.
eventually end up and the auditors can take a look at it is
QuickBooks. Yeah. And I would say start there.
Somehow automatically export data from all of these other channels into QuickBooks.
Yeah. Exactly. So Receipt Bank, Pluto, Expensify, they all talk to QuickBooks.
Okay, so you don't need to like
No, you don't need to re-enter. No, yeah. And I would start with one thing at a time, right? So start with QuickBooks, and then if you find the process of finding signers really annoying, look at Pluto. If you feel like you have too many receipts, look at Receipt Bank. So take it one step at a time and fulfill the need that you have.
Can I just add to that?
Yeah.
And I know it does sound like it's intimidating when you've got one bit of software and people are mentioning all these other ones and you're like, hey, I just need to work all the time. And the fact is that most of the apps are developed now using a common interface. So once you've learned one, the other ones you extend on fit in so well that it's just like another bit of the software. So don't be scared. You just try them one at a time and you'll find they're quite easy and intuitive to use.
I'm kind of worried when I look at the number of channels we use to communicate, and then not all of them are compatible with each other, not from everywhere it's possible to export.
No, I understand.
Okay, thank you.
Common errors. Okay, so this is the first one, don't net revenues and expenses. So this is something that happens a lot with not-for-profits too, is if they do a small fundraising venture, they'll take the total amount raised less the expenses and put the one line item on the in your accounts. So for proper accounting purposes, you're not allowed to do that. You have to disclose your revenues separately from your expenses. Bottom line's the same, but you just have to show them both. Next thing is often people will record pledges as revenue when they'll say, okay, someone said they're going to give us $3,000. We're going to record that as a receivable because they said they're going to give it to us. You're not actually allowed to do that until you receive pledges. So those have to be reversed at year end. Grants, however, can be recorded as soon as they say they're going to give it to you because they are legal documents. Gifts in kind. That is another can of worms, it seems to be, with not-for-profits. So gifts in kind can only be goods. They cannot be services. So if you have someone donating their services, what you need to do is a check swap. And the CRA is happy with check swaps, but they have to give you a donation in exchange for the value of their services.
Can you explain a check swap? How does that work?
They give you a donation. So they do a service for you, you pay them, and then they donate the money back to you and get a tax receipt.
Great.
Okay.
All right.
I have a question. It's kind of about the federal, about the revenue.
Yeah.
So our organization has weekly speaking engagements, so we get honorariums sometimes. So are you supposed to report them as an invoice, like receiving payment as an invoice, or is that like a donation? Because honorariums are like there's no amount that you set, it's whatever they give you.
Right. So honoraria, yeah. Okay, so the first thing is there an agreement for how much? If it's just a donation and there's nothing required, then it is a donation.
Okay, yeah, there's no set amount. It's whatever the church
Yeah,
or
so then it's recorded as a donation. Yeah. Well, you can put it as honoraria, but it is considered a donation. Yeah.
Yeah, I think maybe the question comes down to, is it a form of payment for a service provided? So like, that's a question, right? And I don't really know. So if there's a legal document that says, like, look, I'm giving you this because you showed up. Okay, so that's revenue. Or like, I'm going to give you this even if you don't show up. I'm going to give it to you. Okay, that's a donation. So if it's performance related, it's a service. If there's no performance tied to it, then
okay,
it's a donation.
it's service related, but no price, no figure set.
Yeah, just call it honorario. It's all just revenues.
It doesn't really matter.
It doesn't really matter. Yeah, but here is the whole list of items that CRA requires that you need to have on the receipt. If any one of these are missing, they may discredit it, which means whoever got the donation receipt from you, they may not even get the donation credit, right? So a few common errors here is make sure you have a unique serial number, make sure you have the CRA's web address, and it changes frequently. So double check what address they actually want on the receipt. Needs to be signed. Here's a funky one. The full name, including middle initial and the address of the donor. So a lot of times you forget the middle initial and the CRA gets all fussy about that. So just try to have as much information on there as possible.
And you can find all this information on that handy government website.
Google it.
Google it. Common audit procedures and how to prepare yourself.
This is like an audit exam. I can start with the first one.
Oh, thanks, Bob.
Yeah, take the easy one. All right. When someone says, hey, I want to do an audit for your books, or CRA comes, hey, I want to do an audit, they will basically go through a whole list of accounts, and the question they're going to ask themselves is, how can I have confidence, how can I have assurance that this account is correct and the number that you tell me is actually true, right? And the audit procedure with cash is basically they would look at your bank balance, they will look at your bank reconciliation. If those numbers agree, then you're good. How do we audit accounts receivable, Jean?
Nicely done, Bob. Accounts receivable. So they're going to look at accounts receivable and they're going to say, how do we know that what you're telling us people owe you, they actually owe you? So the first thing they're going to do is they're going to look at your aged accounts receivable listing, and they're going to say, for these ones that are over 90 days, how do we know that these people are actually going to pay you? Maybe these should be just written off. So they're going to look at that. The other thing they might do is they might take a list of your receivables and say, we're going to send letters to these people and say, do you really owe than what they say you do. So they might do that. Truth is, with not-for-profits and charities, you don't have a lot in the way of receivables, so it's probably not a big issue. Capital assets, I think I'll just do a bunch of easy ones and then save deferred revenue for Bob.
Okay.
Capital assets, Bob already mentioned, so they're going to look at any fixed asset purchases you made during the year, so big equipment, tools, office equipment, and then they'll probably look at your office expense account as well to see if there were some, computers that actually should have been capitalized that got expensed. And I know you guys are doing so well for hanging in. You really are. And they'll probably look at your repairs and maintenance and see, was this really a repair, or did they actually make it? Did they actually build something that should be on the balance sheet? So that's what they'll do for capital assets. For accounts payable, they're
So
going to say...
how do you prepare for that? So do you attach something somewhere? Do you keep all the receipts somewhere?
Nice. Thanks, Bob. I realized I did skim over that. So what I'm going to do for that is I'm going to, every time I make a change, I add something to my fixed assets, I'm going to keep that. I'm going to keep all the invoices that have to do with capital purchases in one area. The other thing I'm going to do is I'm going to review, before the auditors get there, my expenses that I've spent on repairs and maintenance in office, just to be sure that anything that's greater than $500, I look at it and say, is that really an expense or should it be capitalized? So that's what I would do.
I just maybe it's just over the detail. I just think that I heard in school that it's over $100. You mentioned $500. That it's
The threshold.
the
Oh.
difference if it's expense or if it's
Yeah.
asset. Like where do you keep it? And I just think that I heard that the level is over $200. And you just mentioned $500. Maybe it's for something else. I was just
Yeah, and this is where it varies depending on what you're doing. So for a not-for-profit, the real rule is, do I expect this to last me for more than 1 year? So if it does, I could say, if it's going to last me for 1 year, I can write it off over many years. If I'm going to use it up before the year's over, then I'm going to write the whole thing off. So
those $200 are not the...
that is a guideline.
The important thing is
The use.
Yes, exactly. And when I said I'm scanning it for $500, that's just because I'm doing it really quickly. It's not because I'm looking for that threshold. I'm just looking for big items to jump out at me.
Okay.
Okay, I hope that clarified that. Okay, accounts payable. So for accounts payable, the auditors want to make sure that I have recorded all the payables that I'm looking at. I've got my list of accounts payable, and they're going to say, how do we know that you don't owe even more money that you're not telling us about? So what they'll want to do for that is they want to look at, what they'll do is they'll take, say your year end is December, they'll look at your January bank statement to see if anything that you paid in January actually related to the previous year.
So how can you prepare yourself?
Oh, how can I prepare myself? I can do that.
You can do it yourself.
I can do it myself.
Yeah,
Yes.
great. So debt and deferred revenues. How do auditors audit debt? Let's say you have a mortgage, or let's say you have a line of credit or a term loan. Simply get a loan statement, mortgage statement, line of credit statement, and make sure that amount agrees to your balance sheet. Okay, that's how you prepare for yourself. Deferred revenues, that's going to be the most difficult one because the reason it is difficult is because it varies. Deferred revenues are a result of your funding contract. So for example, in 2017, you're given $100,000. You're allowed to use $50,000 of it for 2017 and another $50,000 of it in 2018. Well, you can only recognize the first $50,000 as revenues, and you have to defer the second $50,000 as deferred revenues. So how you can prepare yourself is make sure to read, again, all the grant agreements, funding agreements, so you understand what the term is, what the requirements are, and then you make sure you defer the remaining amount. Another example could be, let's say, we have a client that does children's services. So let's say this contract is for funding 100 kids over the course of let's say 6 months. Well, by the end of the year, they only serviced provided services to 60 children. Well, they have to defer then 40% of their contract. So basically, you just have to read the contract and then understand it. Rental deposits, sometimes you have churches that rent out their spaces. You collect rental deposits. How to prepare yourself is to have a ledger that outlines every single deposit that you have on hand, and make sure you agree. Last one is opening equity equals prior year closing. So this kind of makes logical sense. So if the prior year books are closed, then the opening balances of this year have to agree to prior year. That makes logical sense, but it doesn't always happen. So that's one of the ways. One of the things you can protect yourself is actually doing that agreement, right? And then on the income statement side, they will do audit procedures based on the type of income. So whether it be donations or funding agreements, all that depends on the situation. And then how they would do the audit for expenses, 2 ways: analytical procedures and sampling. Analytical procedures just means comparison. So for example, last year's office expense was $10,000. This year's office expense was $45,000. Oh, something really happened here. What happened, right? So if your expenses are pretty consistent, then they probably won't look too hard at it. So if you look at your books and you see a huge jump in one area, pay more attention to that account. Sampling is simply, they will pick a whole bunch of expenses and say, hey, show me the receipt. And that's why you need to really keep that receipt and attach it to QuickBooks. And the last step, they're definitely going to take a look at your payroll, because again, for the most part, a lot of charities, payroll is a really big component. Make sure you have your payroll records ready, ADP records, that kind of stuff. So I think that's it.
Oh my God, you guys are doing so well.
I know, right? Any questions? Yes.
Scanning of the receipts and uploading to QuickBooks. So that's like all the requirement from the CRA. Like, so do you just upload everything onto QuickBooks and you don't keep like a separate letter and like?
You don't have to duplicate your work, because if every receipt is attached to the actual expense, then it's right there in the bill. Yeah. But if you're not comfortable with it, that's okay. You can keep it in both places. Yeah, you can keep it if you want. All right. You can always email us. Find us on Facebook and Instagram. We have
this question.
Yeah, I have a question.
Eli, there you go.
So I've got 2 questions around this. So there's 2 cases. One, you're an idiot like me working on a conference, little event, pretty small and informal, probably not going to hire someone to do this. How do I begin the journey of teaching myself the basics of this? Like, where do I start from? Do I start with an ugly spreadsheet? When do I start moving from an ugly spreadsheet to the next thing? Like, as I evolve as a project, what's the typical path?
Typical path, my friend. I just watched a spoof of Karate Kid the other day. You know what? To be honest, a spreadsheet's okay. If you're nice and small, it's probably going to be okay. Just know that you're not going to be 100% accurate.
Yeah.
Accuracy comes from the process of doing bank reconciliations, and it's almost impossible to do the bank reconciliation through a spreadsheet. So if you're not reconciling the bank, your books are not correct. But if you're small enough, hey, that's okay. Yeah, and then what's the natural progression? Well, there's always YouTube videos, right? There's always a course that you have coming up, which is going to be really, nitty gritty, how to enter those things.
I'm looking for like a good template of a spreadsheet that can sort of set me on the right path. Like that's sort of the question.
You can probably Google that one too.
Right. Okay. So here's my next question. Say I'm getting a little bit intimidated by all of this, and I don't know if I can do this myself. Who would I turn to help me?
Oh my God, Eli. Thanks for asking. Yeah, definitely reach out to us if it's a simple question. Happy to connect and happy to answer it. and with us, there's kind of two ways to work with us. One is to the do it for you method, where we would actually do everything for you, from payroll to accounts payable. We would actually use Pluto, where we would queue up the EFTs, and all you have to do is approve and click and go. The other option is where we actually, like your controllers, where we would spend the time to teach you how to do everything you need to know, nothing more. Do as much as you can, and then we will fix it up at month end and year end, and it would be a much more economical package because you're doing a lot of it yourself. We just come in and basically review your file each month or each quarter.
Cool. That sounds helpful.
Yeah. Great. So, Bori, we can have a chat afterwards about accounting for deferred revenues, because I think it's a bit over this group's head. But yeah, again, feel free to connect with us. Facebook, Instagram. That's a new thing for us. Yeah, feel free to connect with us.
Awesome. And
Any questions?
Don't make that deferred revenue mistake, because my old organization did. We were booking all the revenue in year one, and then one day they came to me and took away my project's money, and I was very sad.
Oh.
Anybody else? Any questions?
On different revenue, can you speak to the difference of charities and nonprofits? CRA says if it's a gift, you record it well.
If it's a gift, what?
If you get a cash donation,
Yes.
right? And
Yeah.
CRA, it's
Yes.
a charity, you have to record it
When you receive it.
when you receive it.
Yes.
So doesn't that apply to grants too? Even if it's a multi-year grant?
No, if it's a grant and they've said we approve you of any grants, the truth is they generally, when you get the letter, it's deposited in your bank the next day anyway. But it's as soon as you get the approval.
Right.
Because,
Not differ the CRA perspective, differ that even if your project.
Oh no, I'm yeah, okay, no. If a part of it's deferred, then no, you have to defer it. Yeah, it's just if it was for that period you recorded as revenue. Yes, thank you for clarifying that. I didn't mean that anytime you get money from the CRA, it's recorded in that period. No.
So when you purchase a computer, do you look at it as an asset or look at the expense?
Computer. So some people will write the computer off in 1 year, but generally the rule of thumb for CRA, if you were filing your taxes, would be 30% a year. But as a charity, you don't have to follow those rules. It's basically what makes sense to you. So if you're replacing your computers every 5 years or every 3 years or whatever, however long you expect the computer to last, you're looking confused still.
Yeah, that's good.
So supposing your computer costs $1,000 and you expect it to last 3 years, then you would expense $333 the first year and then $333. Okay.
So how about the car? It's like the car is made as an asset. So I think that's the 7 years rule to depreciate, called CCA or something.
Yes, but again with charities, you don't need to follow CCA. Okay.
Well, then why don't we wrap
We can
here,
mingle a bit.
and then
Yeah.
in some time we have a lot of pizza to be eaten.
Okay.
And also, this could be a chance for people to have thoughts percolating in their brain while we do maybe a little bit of the announcements and community message board moment.